Welcome to FinTech Matrix, where tech meets money and trends become power. You heard it here first. Today, August 2nd, 2025, we're examining what's driving your financial world and reshaping technology across the globe. First, we break down a FinTech funding rebound, why is the stock market move, U.S. interest rate decisions, and explosive crypto regulation from Washington to Hong Kong. Next, we explore a 16ZS FinTech warning shot, palm payments in Europe, and massive African and Indian FinTech expansion. Finally, actionable insights for what you should do now. So grab a cup of coffee, settle in, and let's unpack what matters to your wallet and your world over the last 48 hours, here on FinTech Matrix. Let's start with what's moving the markets today. Here's your finance update. United States finance. The U.S. fintech ecosystem rebounded significantly over the last quarter, with venture capital surging to $11 billion in Q2 2025. This marks the strongest quarterly performance since early 2022, propelled by major investments in expense management, cross-border finance, and AI-driven infrastructure. Among the standout fundraisers, Ramp, a New York-based expense automation fintech, secured $500 million in a Series E2 round, pushing its valuation to $22.5 billion. It signals deep investor confidence in enterprise-focused platforms, despite broader economic uncertainty. The Federal Reserve, following its July 30th to 31st FOMC meeting, kept interest rates unchanged at 4.25 to 4.50%, with two dissenting votes that reflect internal divisions over inflation and growth. While GDP rose at a solid 3% annualized rate, concerns linger around persistent core inflation and high mortgage rates, prompting cautious forward guidance. Meanwhile, tensions between banks and fintechs have escalated sharply. A new edition of the A16Z FinTech newsletter dubbed the current regulatory environment Operation Chokepoint 3.0, accusing major U.S. banks of blocking competition by imposing exorbitant data access fees and account restrictions on startups, especially in crypto and alt banking. These allegations echo concerns raised by major venture firms about financial censorship and anti-competitive banking behavior, further intensifying debates in Congress and at the Consumer Financial Protection Bureau (CFPB). Finally, the White House Digital Asset Strategy Report, released on July 31st, introduced over 100 regulatory recommendations, including stablecoin compliance, consumer protection, taxation, and centralized digital identity frameworks. The report builds on the Genius Act passed earlier this summer and is being closely monitored by the CFTC, SEC, and Federal Reserve. United Kingdom finance. In the UK, shareholders of fintech giant Wise overwhelmingly voted by 91% to shift its primary stock listing to the United States, seeking greater capital market visibility. The company will retain its dual-class share structure and a secondary listing in London, but aims to complete the U.S. transition by Q2 2026. Industry analysts say the move reflects ongoing frustration among high-growth UK tech firms over London's limited liquidity, lower tech valuations, and post-Brexit regulatory friction. Also notable is rising momentum in early-stage UK fintech. AI-powered financial ops firm Zelix raised $160 million in its latest round, while Structured AI and Meeting, two London-based startups, closed early pre-seed deals focused on automated compliance and AI-enabled wealth tracking. As competition for capital intensifies globally, these fundraisers suggest UK fintech is doubling down on automation and enterprise intelligence to stay relevant. Global finance. In India, UPI-based payment startup Rio Money was acquired by corporate spend platform Zaggle, allowing Zaggle to enter the consumer market through credit-linked UPI products. The move coincides with increased RBI oversight of fintechs offering regulated products, suggesting a drive toward full-stack compliance. Meanwhile, Sflo, a cross-border payments provider also based in India, received regulatory approval from the RBI to offer international B2B remittance services. Sflo now plans global expansion, with a focus on helping Indian SMEs participate in global trade. Across Africa, MTN Ghana reported a 56% profit surge in H1 2025, fueled largely by fintech and digital banking growth across its user base. The telco's fintech arm has rapidly expanded in areas like microlending, airtime as currency, and digital wallet transactions. In a bold regional initiative, the Afrexim Bank and Mercury Payment Services jointly launched the PAPS card, a pan-African card network designed to improve intra-African payments, reducing dependency on global card schemes like Visa and MasterCard. And in Latvia, biometric startup Handwave raised €3.6 million to develop palm-based payment and identity tools. The company plans to launch biometric readers for merchants and consumers by Q1 2026, reflecting growing European interest in frictionless, privacy-first payment solutions. Crypto markets. The broader crypto market declined over the 48-hour period, with Bitcoin falling 2.3% to $115,555 and Ethereum dropping 4.8% to $3,673. The sell-off was part of a wider market risk-off sentiment, though institutional flows into Bitcoin ETFs remain net positive for the week. Meanwhile, Stellar, XLM, emerged as July's breakout performer, posting a 68% monthly gain and reaching a market cap of $12.16 billion, driven by new tokenization partnerships with cross-border banks in Asia and Africa. The U.S. Treasury's Digital Assets Report, released July 31st, drew industry attention for calling on Congress to clarify the tax treatment of DeFi protocols, develop CBDC interoperability standards, and designate a lead regulator for stablecoins under the Genius Act framework. Simultaneously, Hong Kong implemented its Stablecoins Ordinance, Cap 656, a comprehensive licensing framework designed to regulate the issuance, backing, and redemption of stablecoins. Over $1.5 billion in capital has already flowed into crypto and payments infrastructure firms looking to operate under the new regime. Finance wrap-up. Bottom line, fintech funding is roaring back, crypto regulation is rapidly evolving, and both the US and UK are repositioning for deeper integration with global capital markets. The pressure on banks from fintechs, and vice versa, is reaching new heights. Let's pivot to the tech sector now, where AI policy, surveillance systems, and digital platforms are making major waves. United States tech innovations saw continued expansion into biometric identity, AI finance, and cross-platform payment tools this week. Venture firm A16Z warned of systemic barriers created by entrenched banks and regulators, who it claims are deliberately slowing innovation by enforcing outdated risk rules. Its latest FinTech report highlights growing investor concern over regulatory capture, calling for modernized frameworks to support AI-first financial products. Salient, a rising AI-driven loan servicing startup based in the U.S., raised $60 million in series of funding. Its platform automates borrower communications, collections, and compliance, targeting mortgage, student loan, and buy now pay later portfolios. This signals broader interest in automated credit management as lenders seek cost-effective ways to service large volumes of post-pandemic consumer debt. United Kingdom tech. In the UK, Structured AI and Zelix are gaining traction with tools designed to help CFOs and controllers automate invoice reviews, detect fraud, and eliminate reconciliation errors. The UK continues to bet heavily on AI compliance and financial transparency tools, particularly as regulatory reporting burdens increase for fintechs operating under dual authority oversight from the FCA and PRA. Additionally, Meeting's newly closed round hints at growing demand for social plus AI hybrid wealth apps, particularly among Gen Z professionals who blend digital-first banking with community-based financial advice. Global tech. Handwave, Latvia, leads the biometric innovation space in Europe, raising seed capital to deploy palm recognition tech in payment terminals and smart kiosks. The company positions itself as a privacy-first alternative to facial recognition, leveraging local device processing to avoid centralized data storage, aligning with EU digital ID standards. In Africa, the tech behind the new PAPS card combines mobile wallet integration, facial authentication, and real-time currency conversion, a sign that African fintech is fast evolving into a global testbed for payment interoperability. Tech wrap-up. Bottom line, AI, biometrics, and cross-border finance tech are shaping the next wave of global fintech, while calls for smarter regulation grow louder in the US and UK. And that wraps up today's breakdown. From From the Fed's interest rate pause and surging venture capital in FinTech, to Bitcoin's downturn and Washington's sweeping digital asset strategy. And from Wise's listing shift to Wall Street, to Africa's pan-regional card launch and Europe's Pomskin tech breakthrough. One thing's clear: the future of finance and technology isn't just adapting, it's accelerating across borders, policies, and platforms. Whether you're navigating crypto regulation or following the next FinTech mega-round, staying informed is your edge. If today's deep dive helped you make sense of the shifts, don't forget to like, share, and subscribe, and hit the bell so you never miss what moves the market. Drop a comment below. Are big banks holding back FinTech and crypto, or simply protecting the system? And remember, this is FinTech Matrix, delivering money, tech, and trends to your doorstep. Stay ahead, stay informed, keep watching FinTech Matrix. Thanks for watching, and we'll see you in the next one.